Global economy, global world community must act with a sense of urgency and at scale to ensure that we meet the Paris Agreement and the 2030 Agenda for Sustainable Development. There is considerable pressure on the private side actors to act on behalf of climate change, given the magnitude of resources that are needed. It is estimated that only about 5% of private side investments are directed to climate change related activity. We do, however, notice the tide is turning. More and more private side entities are seeking to extend their conventional bottom line approach of fiscal performance or profits and loss by adding a second bottom line, namely that of having a positive social impact, for which climate change is one of those objectives. Many FIs are also seeking to reduce their exposure to fossil fuel, so that effectively is an action in favor of climate change. The GCF is the leading dedicated fund for dealing with climate change and helping countries attain their low emission and climate resilient pathways. As of 2015, when the GCF started, and as of today, actually, we are engaged in 25 private sector projects, totaling $2.2 billion, and able to mobilize another $7 billion. So it's a 1 to 3 mobilization rate, which is not too bad for a startup entity. But the need is greater, and that's why we're here today. The GCF recognizes the private side has an important part to play, so we are actively engaging. We're looking to develop an opportunity, a platform for co-investing and form financial solutions with private side for countries to achieve their climate mandate. So I'll stop there with that introduction, and I'll let the panelists introduce themselves, their countries or their entities, and tell you more about what they're doing. The first panelist is Minister Cosgrove. Please, you have the floor.
Hello. Thank you very much, Mitch, for the introduction. As introduced, I'm Minister Wallace Cosgrove from the Seychelles. I'm the Minister for Environment, Energy, and Climate Change. First of all, I know that the topic of discussion is on finance, but I would like to introduce a bit my country, Seychelles, and try and put things into perspective, and eventually move on to what we are doing in the Seychelles. Countries like Seychelles, small island developing states, where financing, more particularly private financing, have an impact on our countries, and how beneficial or how difficult sometimes it is to get private investment. And then I will talk a bit about two of the investments that we have had in the Seychelles in terms of private capital. So basically, like I said, we have to bear in mind that I come from a small island developing state, and having said that, we have to understand the specificities and characteristics of small islands and countries like mine. I know it's been alluded earlier by countries from Maldives, from Antigua and Barbuda. They've discussed about the size of our countries, the isolation of our countries, the resources that we have available, the vulnerability of our countries, and of course, they've talked about the urgency for action. Now, all of these has an impact on financing climate actions. Having said that, most of these countries are within a developmental stage, and this presents a unique opportunities for us to be able to have a sustainable development that in the future we will be able to perhaps introduce smart climate initiatives when it comes to power generation, when it comes to other sectors that have an impact on the climate. So there is an opportunity for us, small island developing states, for us to do it right, because we are at this stage of development where investments can be put into the right way. Now, having said that, it is a challenge. It is a challenge in smaller countries to have private sector investment into climate solutions. More specifically, again, like I said, sometimes it doesn't really make sense in terms of the size, in terms of the level of investments that private sector needs to undertake, because sometimes financial institutions don't make it attractive for these private organizations to invest in climate smart initiatives. But like you said, increasingly now they are adding a third bottom line, which is social responsibility. And we know that now big companies are now very much interested into putting climate issues, environmental issues into their business agenda, because not only because it is fashionable, but we know that it makes sense. It makes sense for the viability of their businesses for the future. So big companies are now looking at ways to include environment and climate issues into their business models. In the Seychelles, like I've said, we have issues, and I'm sure a lot of small island developing states would agree with me. We have issues with local financial institutions to invest in, for example, renewable energy, to invest in other climate smart initiatives. But what we have done over the past years, I think we came up with two innovative modes of financing environment, which eventually leads to financing climate smart initiatives. One which I would like to talk about is the debt for nature swap, which we did together with TNC. What we basically did was we took part of our debt, and I know a lot of countries like us, small countries, have a lot of debt because we need the money to develop. So we took part of our debt and converted it into money that could be used for nature protection. And as part of the agreement that we had is that we would swap around $22 million of debt into nature conservation. And in that sense, we agreed to do what we call a marine spatial plan. We agreed to protect 30% of our EEZ, which is basically around 400,000 square kilometers of our EEZ, which is basically a 1.3 million square kilometers EEZ. And this 30% equals to the size of the UK, if I'm not mistaken. So it's quite significant. And perhaps many would ask, what is the relation between this debt swap and climate? So basically, what we're doing with the marine spatial plan, we're having a 30% protection areas, where we have 15%, which is basically no-take, protected, where you have areas of seagrass, areas of beauty, coral, and other lives. So we would perhaps use these areas for us to now input in our next ambitious NDC, using the ocean as part of the NDC, where we would allow, because we all know that it has been defined and agreed that seagrass, oceans absorb the carbon. So part of what we are doing will impact on our climate actions. So that part of the debt swap is basically getting money to invest in nature, invest in conservation, and eventually that would link to climate actions. We also have another instrument which we developed together with the World Bank and the GEF, which is basically the world's first blue bond. The world's first blue bond is for Seychelles is around $15 million. Part of it is a grant component, and part of it is a loan component. The grant component finances small businesses, which has businesses within the marine area, sustainable fisheries, conservation, And also the loan part of it allows for bigger companies to invest in sustainable fisheries as well. So what's interesting about this is that the grant component can act as an incubator, if I can put it like this, which allows for small businesses to incubate a business, and then eventually, if it makes sense, if it's profitable, then the loan component can be taken. So basically, the blue bond also allows us for conservation, which eventually will lead to climate smart actions. So I wanted to touch a bit on those two instruments, which are private sector driven, and the opportunities for small countries. Even though it's difficult for us to go on the capital markets and get finances, there are possibilities for smaller countries like Seychelles and other small island developing states to get private financing and to help move with financing climate initiatives. So basically, this is what I wanted to discuss about, and perhaps we can discuss further eventually while we interact. Thank you very much.
Thanks, Minister Cosgrove. Certainly, your country looks like it's using some really good financial structures to meet its climate change mandate. Let's introduce Camilla from EBRD. EBRD is no stranger to financing climate change activity across the globe. Camilla, if you could please introduce yourself, maybe share your experience in business models, technology that pushes the frontier of innovation, as well as innovative approaches to mobilizing public and private sector to do good things in climate space.
Thank you very much for the introduction. Very pleased to be here. My name is Camilla Otto. I'm in charge of donor relations at the EBRD, the European Bank for Reconstruction and Development. This is actually the first time I'm in Songdo and the first time I'm at the GCF. But GCF is one of our absolute biggest donors and key partners, so it was long overdue, my visit, but very happy to be here and to contribute. I thought I'd say a few words of introduction about the EBRD and then focus a little bit on how we operate. So we have been around since 1991. We, as an institution, sprang out of the end of the Cold War and the end to the Soviet Union, Yugoslavia, and places like that, which had a very transformative changes for those countries. The idea when the EBRD was set up was to help these countries then transition from central planned economies into well-functioning market economies. And as part of that was a mandate to promote private sector development, to promote entrepreneurship, and help countries set up good business and investment climates in their countries so that private sector can flourish. And today the bank focuses very much on private sector in its work. About 80% of all we do is directed towards private sector clients and private sector development activities. Now, EBRD was not meant to be here forever. We were what was called a sunset bank. We were supposed to have sorted out these questions of transfer from planned economies to well-functioning market economies in a decade or so. Let's say that the mission has not yet been fully accomplished. There are still challenges out there, and new challenges have come to the fore. So following on from the Arab Spring in 2011, 12, 13 onwards, it was decided to expand the bank's remit also to North Africa and some countries in the Middle East. And now we are very active in these parts of the world, and I think we are here to stay. We started to work on the green agenda, if I can put it in those simple terms, around 2006, but it picked up a lot around 2008 and 2009 when this agenda really took off with lots of new commitments, the establishment of new institutions, the G8 at Glen Eagles, etc. And ever since then, we have been extremely active in this part. It is, I think, very justified in the region we work in. We work in 38 countries, from Morocco to Mongolia, from Estonia to Egypt, we usually say. So it is a configuration which springs from what I just explained, our history and our origin. You have in our region many countries who have a very high water stress. So the issue of irrigation, access to water, etc., and water and wastewater management is high. You have in our countries, in our region, many countries that are very carbon intensive. They have a higher carbon intensity than the world average. You have many industries that are extremely polluting, and you have also in our countries a low penetration of renewable energies. So there's good reasons for us to focus a lot on the green agenda. And we also believe that the green agenda is indeed critical for a well-functioning market economy. So we are trying to help countries build low carbon and climate resilient economies. We have set ourselves some really ambitious targets. So 40% of what we are doing in any given year is supposed to be in the green space. We are now, our investment volumes in this field is about 30 billion euros since for the last 15 years, and almost 2,000 different projects. Now, I just wanted to turn the attention a little bit to innovation and how we operate as a bank, because I was the subject of this panel. We believe we are actually quite an innovative institution and operate in quite an innovative way, and wanted to share that a little bit with you. And we are certainly applying this in our cooperation with the Green Climate Fund. So I had 4 points that I will walk through quickly. The first point is our business model. So we have established over time, and this was not how it worked from the beginning, but it's emerged in recent years, a sort of triangular business model where we are combining investment, which can be either the bank's own investment or investment by donors, with policy dialogue, which is key support to develop the right policy framework for the country in question or the sector in question, and technical support and technical expertise. And the key is to find the right combination of all of these factors to have effective projects and to have real impact. And when we are working with GCF, we are very much applying this model. For example, our big renewable energy project, or framework rather, with Kazakhstan is a good example of operating exactly like this. We have worked with the authorities to help them develop a renewable energy legislation. And we are also investing our own resources and GCF's resources in introducing the first renewable energy power sources into the country. A second way that we operate in, which we believe is absolutely crucial for the agenda, is our ability to scale up and to leverage. It's very clear that the challenges are such that just grant-based resources or a little bit here and there is not going to be enough. It's extremely important that we are acting at scale and that we are scaling up. And EBRD does that by putting its own money on the table, and that by blending that with the resources of donors such as the Green Climate Fund, but also private sector. Very important. And by doing that, we can leverage a lot of more resources. So we leverage it in different ways, and one of our main targets is to get the private sector to also add additional resources to our investments so that they are engaging as well, and we are pumping more private sector resources into the sectors and into the markets. We also work for many of our projects through a business model which is using intermediated finance, it's called. So we work through local banking systems in countries, and by offering support and credit lines to local banks and banking sectors, who in turn then extend these loans to users, clients, investors, could be households, could be SMEs, could be mid-caps, for investing in various types of green technologies, energy efficient solutions, whatever it may be. We reach out to a large number of beneficiaries. So we provide not only support to the banking sector, but we also open up new markets for more green technologies. So this is very crucial for us, and it's a way for us to act up and scale. With the GCF, we have a quite large portfolio. I believe we are one of the biggest accredited entities for the moment. But the vast majority of our portfolio with the GCF is reimbursable loans, which means that these activities, when they have been well invested, will of course come back to the organization and can be reused and reused. And this is of course a different way to reach scale. A third dimension that we focus on in terms of being innovative is, of course, to use, deploy, develop and boost new technologies and new solutions. And this is where we are working very actively using GCF resources to boost that in various situations. You will have seen, I think, on the videos for the first day, the fantastic solar park in Benban in Egypt, where we are, together with the GCF, supporting new technologies. It's called bifacial solar modules with solar tracking systems. These are high-tech ways of getting the most of energy out of the sun with the least possible investment. And so we stand behind these things, trying to create markets for it, trying to bring down the prices and the transaction costs for these. We work in many other areas as well, which are innovative, whether it's efficient cooling systems, material efficiency savings, etc., and has various programs and projects to help promote new and innovative technologies. The last aspect is innovative financing solutions, and I think the minister just represented some really interesting examples of blue bonds, etc., and swapping debt for natural resources conservation, which makes all the rest of us green with envy. We work as much as we can in setting up various kinds of arrangements that works. We try to be flexible, so we adapt the financial solutions to the countries, the clients, the sectors where we are in, and we are very, very happy to take risks. We are a bank, so we take calculated risks, but we take risks, and we think it's very important to take risks to be able to scale up. So one way we're working with, and I know that GCF also has these facilities, is working through guarantees and first loss. So these are funding solutions which can be extremely effective if they are well structured and actually protect resources, and you can leverage enormously. So with little money put aside as a guarantee, as a first loss facility, you can expand your investment and you can reach much further with the same. So the same US dollar or euro goes very, very far. Another way we are trying to be slightly different from others is that we are funding and supporting at sub-sovereign level. So not only do we work with sovereign, and certainly we work with private clients, that's one of our main activities. We are one of the few MDBs that also work at sub-sovereign level. So we're supporting municipalities directly and local utility firms. And this is quite crucial because a lot of the activities, of course, and a lot of people live at municipal level, and there's a lot of activities that needs to happen. And some of the activities we're doing with the GCF, it's called Green Cities. It's a package solution again, where we're bringing in the triangle of different things, but this is focusing at sub-sovereign level, helping municipalities to launch a package of investments and policy plans that are setting them on a path for low carbon growth. The final aspect of our financing models are local currency. We are actually the MDB or the IFI who provides most of our transactions and projects in local currency compared to others. We believe this is crucial because local currencies or not local currency, international currencies, can be extremely detrimental for countries in terms of currency fluctuations and volatility. So we convert with the help of donor resources to be able to hedge the risks. Many loans into local currency, and then we are in a different affordability scheme, and the impact on end users and investors and companies and people can be much more positive. So these are various types of ways that we are working with the private sector to be innovative, to reach out, new technologies at scale, blending with others and in partnerships. I'll stop here, but I'll be very happy to take questions afterwards. Thank you.
Thank you, Camilla. All the things you mentioned are one reason the GCF is such a strong partner. You'll introduce very good climate change deals to us, and we're happy to help co-finance. Our next panelist, Kate. Kate is from Acumen. One of our first investments by the GCF was to Acumen. Kate, you guys are early in the shaping of impact investing. How does Acumen drive critical investments in the climate nexus by delivering on the SDGs, generate competitive return at the same time? Please.
Great. Thank you all so much. My name is Kate Montgomery. I'm Director of Partnerships with governments particularly, including our relationship with GCF most recently. Acumen is incredibly proud to be working with GCF. Like Mitch mentioned, we were one of the first accredited entities. Acumen's mission is to change the way the world tackles poverty by investing in companies, leaders, and ideas. Our model uses investing to catalyze market solutions where traditional markets have not yet reached and where aid has fallen short. We invest in what we call the pioneer gap, so innovative companies who are serving the poor and providing access to goods and services for those that need it most. We've invested over 124 million in 122 innovative social enterprises in 14 countries. That's leveraged an additional 600 million, and we've impacted over 260 million lives. So really the model's about finding the innovative companies that are serving those that are low income in developing markets, and really finding the way to give them the capital that they need to succeed. What we found is that we've done this for about 18 years, and we know that different types of capital is needed for different stages of organizational and market growth. We've also seen that access to finance is still a major challenge for early stage businesses. So we're really trying to come in the first 2 to 3 years of a business's development and give them the capital that they need to succeed. It often means that we stay in companies for about 10 to 12 years, and really see them through their stages of growth as they're really trying to figure out their business models, and figure out how best to serve these populations in a profitable manner. Finance is still a major challenge, and more capital is needed, and quickly. This is where GCF has stepped in. So about 3 years ago, we've been investing in off-grid energy for about 12 years, and in agriculture for about 11 years. And what we found was, we've been doing a lot of investing in individual companies, but we really wanted to switch our focus to really look at systems change. And so with the support from GCF, we've built a 70 million for-profit initiative focused solely on East Africa to help grow companies that will build an off-grid energy ecosystem. And the target is to bring energy access to 10 million low-income customers while saving over 1 million tons of CO2. The hypothesis was really about how do we prove to the government that off-grid is faster, cheaper, and more effective than extending the grid. We got an anchor investment from GCF of about 20 million, and from that we've leveraged another 50 million to get to the 70 million target from other private sector investors, including Skoll Foundation, private investors like Chris Anderson of TED, and Steve Jurvensen. And now the Kawasaki Ventures is the name of the fund. It closed late last year, and already it's invested over $20 million in about 5 companies. The companies, again, have already reached about 6.4 million lives in East Africa with energy access. And our target was 1 million tons, but we've already averted about 2.2 million tons of CO2 in just those 2 countries. And the fund is making sustainable contributions to energy access rates in both Kenya and Rwanda, and also contributing to the country's NDC targets to reduce climate emissions. So in just the energy access side, Kawasaki companies have brought energy access to 5.8 million in Kenya and about 626,000 in Rwanda. And again, this is places where the access rate is about 65% in Kenya, and in Rwanda it's about 30%. So in that way, we're kind of making significant contributions. And then on the climate emission sides, Kenya's NDC target by 2030 is 42.9 million tons. And again, we've already averted about 500,000 tons in Kenya alone. To give you an example of one of the companies that we've invested in, their name is D-Light. They are an off-grid energy company that creates small solar. So, first it was really solar lanterns. Their most affordable one is a $5 solar lantern that can be used as a study light for kids that need it to study in school. And then they've also expanded into their largest system is a home system. So this is it has lighting, it has a TV, and they can pay for it over time, which allows the poorest to be able to access something that can give them a TV, which means they can pay as much as they can afford over a day or a week or a month, and then eventually pay it off over time. And in that way, these companies are really innovating and provide to serve these populations. And for example, that company alone, it was one of our first investments in off-grid energy. They've now impacted alone just 94 million lives. and they've reached 100 million in revenue. So it's a real success story, and it's really proving out this idea that you can have a for-profit, innovative company that can really, address a huge challenge in energy access for the poorest. Another thing I want to talk about is our new, based on that success, we've now gone back to GCF, and we're actually co-creating a new initiative that's really looking at sustainable agriculture. So we've been investing in smallholder farmers for about 11 years, as I mentioned. Just a couple stats to kind of set the context. About 2 billion people in the world work on smallholder farms across the globe. They produce roughly 70% of the world's food, but live on less than $2 a day and struggles to make ends meet. And their farms and their livelihoods are expected to bear the brunt of the negative effects of climate change. They are on the front line of the severe droughts and intense rain that we're seeing across the globe. And while the African continent is home to about 25% of the world's agricultural land, it produced just 10% of the world's food. So there's also a big challenge there in terms of productivity. So we were starting to see many companies, social enterprises, starting to look at how to serve these smallholder farmers to make them more productive, et cetera, but also apply a climate resilience lens to their innovations. And that really, and with the partnership of GCF, they really pushed us to say, could we think about this, from an adaptation lens? And together we're building an initiative to enhance the climate resilience and livelihoods of smallholder farmers. So, our view is really how do we kind of make these farmers more sustainable? And GCF really pushed us to think about how do we make them more resilient as well. And so, we're working on an initiative to focus on early stage equity investments into businesses that deliver climate adaptation solutions to smallholder farmers in Africa. Its aim is to impact 10 million lives in East and West Africa by supporting about 15 early growth stage companies or agribusinesses that align with climate adaptation objectives of smallholder farmers and the African governments. And GCF has seeded the initiative with an investment towards a catalytic first loss facility, which is really interesting because that first loss facility is allowing us to track, give low-risk opportunities to the private sector to invest senior equity in this fund. And this unique financial instrument allows acumen in our companies to innovate and experiment while still scaling and helping us de-risk a highly risky early-stage businesses in Africa. And the funding will also support us to enable us to measure the poverty focus and the impact of these investments. So we're really excited about this opportunity. We really hope we can do more together, but those are just a couple of examples of how Acumen and GCF are working together to innovatively address these issues.
Thanks, Kate. As Kate mentioned, one of the features of GCF is the ability to take on risk, such as the bottom of the capital structure, such as equity investments, to make the more senior investors feel comfortable in entering in scale. So that's a good feature of the GCF. Thanks for that, Kate. Our next panelist, Joe, a colleague of mine, head of the Independent Evaluation Unit. Joe recently completed a performance review of the fund. Joe, please introduce yourself, share your recommendations for mobilizing private sector finance at scale following your forward-looking performance evaluation.
Thank you so much, Mitch. Hear me? Yeah, thank you so much, Mitch. Really a privilege for me to be here and for me to be sharing the stage with the Minister and Camilla and Kate. And I think, so just by way of introduction, let me just briefly talk about the Independent Evaluation Unit. The Independent Evaluation Unit is part of the GCF structure, but is independent of the Secretariat and reports directly to the board. So I report directly to the board, and I have a team, many of whom are here. And we're located in G Tower as well. And we've got, as part of our mandate, we've got three big things that we basically look at. First, in terms of our responsibility, the board is mandated that the IEU, the Independent Evaluation Unit, provides strategic guidance to the board on and for its decision making. And the way we translate that for our own actions and for our own operations is that we put together, synthesize, produce, and get ready for, provide ready for uptake evidence from evaluations so that the Secretariat, the GCF board, as well as the world in general, can use it to essentially go forward in an evidence-based way. So that's one. The second thing that we are asked to do is to undertake evaluations. And these evaluations are done at different levels. So they can be an evaluation of the GCF. So like Mitch said, we just finished a very short evaluation of the performance of the GCF, and I'm going to encourage you all to take a look at it. We have a booth outside. Definitely engage with my colleagues. It's also available on our website. And this was welcomed by the board at the most recent board meeting that was held in Songdo. And the performance review of the GCF essentially was done as one of the many types of evaluations that the IEU undertakes, along with country evaluations, thematic evaluations. So for example, we've also done evaluations of the readiness program of the GCF, and we've also looked at the results management framework of the GCF. And we see ourselves essentially as truth-speaking friends of the GCF Secretariat. So we definitely have our ear to the ground, but it's my job to go and speak to Mitch as well as to Yannick and to say, well, yeah, we're doing well, but we can do much better. And this is how we can do much better, right? So tough love. And then the third thing that we do is also provide these evaluations to the UNFCCC and to the COP, as and when it's requested. So as part of all of that, our office started essentially in 2017, which is when I joined, and now I have an office of about 24 people. So let me talk very briefly then, Mitch, about some of the things that I think came out for us quite saliently in the performance review of the GCF. And what I do want to underscore is that overall we found that, for its youth, the GCF was doing well, but it can do far better. And so I'm going to make 3 points about where the GCF should be doing far more than it is doing now. The first is recognizing that science is not enough. We know this, many of us are scientists. I think this was mentioned yesterday as well. But what I mean by that is that we've had too many years, both in the development space as well as in the agriculture space, of recognizing that, well, most of us know what we should be doing, except we don't. Behavioral science has to be made sexy again, and we're not doing enough to make that sexy and cool. And why that is important is that the organizations such as GCF, such as EBRD, such as Acumen, can keep putting out science, can keep putting out evidence, and can keep trying to think about policy change. But unless we are thinking about that last mile of delivery, unless we are thinking about what is going to make us take action, which within the menus of action that we want to take, this is going to be insufficient. We've seen this, for example, we all know we should go to the gym, we don't go to the gym. We all know we shouldn't smoke, many of us still do smoke, etc. So behavioral science has to be made cool again, and it has to be incorporated into GCF investments, because that is what is going to make us realize that last mile for GCF investments. We can keep putting out climate information infrastructure, we can keep putting out new policies, but unless we take care of that last mile, we're not going to be achieving what we set out to, especially for climate. And that becomes particularly salient because this is where we have seen, I think traditionally, climate change has been a failure of science communicating well in the context of behavior. So that's my first one. So make behavioral science sexy again. The second one that we also pointed out in the performance review of the GCF is innovate. Innovate in financial instruments. My colleagues here spoke about innovation within their own organizations and the extent to which GCF is supporting that. Interestingly for me, we actually looked at the project in Egypt, Camilla, and we also looked at the acumen work in Rwanda and Uganda. Very exciting. And of course, we, in Egypt, we felt GCF could have done more, for example, because GCF was coming in for a very small percentage of that overall investment. And so our question to our GCF colleagues was, yes, we can take credit for a huge amount of innovation that our partners are showing, but we need to do far more because our investment was less than 10% actually. In the case of acumen, so fantastic work, I think, from all organizations, but our big uncomfortable question that we started to ask was, well, why is it that we're not scaling this far more, right? Acumen is one of very few organizations that GCF is working with that it truly represents the private sector, but mostly GCF works with multilateral banks, and that's where it leverages most from. If you look at the leveraging ratio of every dollar invested by GCF, it's $2.50 for every dollar. It's slightly more for private sector projects compared to public sector, compared to mitigation and adaptation and public sector projects, but the differential is not as large as it could be. So if GCF truly wants to be paradigm shifting and transformational, it has to go and be able to leverage this impact in greater and bigger ways. One of the things, and Minister, thank you so much for bringing up this idea and also talking about a blue bond. One of the things that we've been talking about with the Secretariat is introducing or thinking about climate impact bonds or resilience bonds. Things that the GCF can and should be thinking about as it innovates in this space so that resilience and climate impact can be monetized in a way which is clearly come of age. So there are blue bonds and there are green bonds. But clearly, and we've been seeing this in the development impact space, that you can look at, and I think this has been an urban legend, for far too long, for example, that adaptation cannot and is not open to private sector initiatives. I think we want to take the other side of it. One, if the private sector has not traditionally played a big role in adaptation, then GCF has to take the first, has to make the first move in that space, because that space is rich with possibility. But I think I want to make a stronger statement there and argue that a lot of other agencies are actually doing a whole lot more in the adaptation space and innovating with the private sector by creating symbiotic ecosystems. And what I mean by that is this. If you look at your cell phone and you have Google and Siri and you all have Apple cell phones, a lot of that innovation was not done by the private sector. A lot of that innovation was actually supported by states, by organizations and by states that can take on a lot of risk, and then VC funding came in at a second stage to then support what was possibly effective and or scalable. The GCF is in a fantastic position where it can take advantage of that cascading possibility. You can come in with the grant facility. So currently, 40% of GCF's resources are currently in grants. You can come in with the grant facility, take a lot of that risk, go in for something that is truly innovative, and then get the private sector to come in at scales that are far larger. That also helps the GCF to innovate. But thinking about these symbiotic ecosystems, where grants and non-grants instruments are combined together, is clearly one way that GCF has to really pursue and to think about resilience bonds as well as climate impact bonds. And then the third thing that we recommended in the performance review as well is to think about, for example, an innovation hub. An innovation hub where, and I'm going to only throw this out as an example and to get your imagination somewhat stimulated, where GCF can be the Elon Musk, essentially, in the innovation space. Because if not GCF, then who, right? So innovation hubs where GCF is also ready for some amount of failure, where some projects fail, and it's okay for that to happen, as long as we learn from what has not worked, so that we can then lead in that space and tell the rest of the world, this is what works and this is what does not work, but have set a very high bar for what is allowed to be funded by that innovation hub. So I'm going to essentially leave it there. So just to summarize, behavioral science, make it sexy again. Innovate in financial instruments and think about symbiotic ecosystems, and think about climate impact bonds and resilience bonds. And third, be ready for failure and set up innovation hubs so that GCF is far more proactive rather than reactive within the innovation space. Thank you.
Thank you, Joe. I'd like to turn to our audience now to see if we have any questions out there for our panelists. I don't see any hands, but I certainly have a couple of questions. Minister Cosgrove, we heard swaps, FIs, financial guys like myself. Those things that pique my interest, of course. But the swap you mentioned, is it possible to use that for climate also? Especially since you mentioned the SIDS are leveraged, highly leveraged, don't have any headroom for borrowing. What's your thought there?
Yeah, thank you, Mitch. I think if you look at what we did in the Seychelles, so the swap is basically for conservation, but conservation eventually leading to climate. So I think it's definitely doable. We just need to get our hearts together and get the organizations to think how we can leverage the funds, bring the funds together, and get and also get countries to be interested. Countries to be interested to take the risk and to be part of conservation measures, which would eventually later lead to the right climate actions. So I think the funds, the debt swap can definitely be adapted to climate, and we just need to have the right mechanisms and get countries and investors to align their interest and get moving. So I think it's 100% doable. Thank you.
All right, Camilla. You mentioned local FIs. You deal with local FIs to help them build capacity to finance climate change activity. In some sense, financing climate change activity is more difficult than traditional infrastructure financing because infrastructure financing has been done and they're perfected for decades, if not centuries. How do we help build the capacity as local FIs to take on the needs of their countries a little better?
There is thankfully a lot of expertise out there, and by bringing the expertise to where the needs are, we are finding the solutions. So this is why the packages that I talked about before are so crucial, that we are identifying together with authorities what their needs are. We are bringing resources and we are bringing expertise together so that we can find the solutions. So definitely there is possibilities to do that. There is ample opportunities around the world. We are working a lot with local municipalities to do precisely that in what we call the Green City Framework Program. And we are sitting together with the authorities. We are establishing action plans which are identifying the priorities, for their cities. We have a kind of a minimum of 100,000 for the cities we are working with, but that can change over time, so that we are also not just going for the capitals, but for secondary and tertiary cities. We're bringing in expertise that are helping in this exercise of identifying what are the challenges and the priorities. We are bringing in expertise in various specific areas which are typical for this in this field. It could be urban transport, it could be solid waste, water management, district heating, lighting, things like that. And then we're bringing in the financing together to build on the advice that they are giving. So it's a combination of all of these things. It does take a bit of grant resources. Some of these things are not reimbursable and commercial in the same way. Investments are eventually, but capacity building needs to be accompanied with grant resources. So this is the model that we're working. It's a huge need out there, and as donors and financiers, we have to find this dimension on every investment that we are doing.
Thank you. Maybe another question is, Joe mentioned a lot of the innovation comes out of national labs, for example, for energy, and then the private side helps make that commercially viable by helping them get to market with their product that has been proven. GCF has a mandate to invest in these technologies also that could have a disruptive impact on climate change. And this is open to any of the panelists. Any recommendation and suggestion how GCF should get started on this effort? I think you guys are, Kate, you guys have been doing this a long time, so please jump in.
Yeah, I mean, kind of building on Joe's point about behavioral economics and kind of creating an ecosystem. So the new project we're working on, the Resilient Agriculture Fund, we got support from DFID, the UK Development Department, to really kind of put a research sidecar on the side of that, with the thesis to say, you know, the companies that we want to invest in are companies that are creating innovation around climate resilient technologies or services or practices, and then they're trying to bring them to smallholder farmers and get them to adopt them. But that in and of itself is somewhat of a complicated proposition, right? So, you know, poor farmers are some of the most risk-averse people in the world. You'll often see that, you know, they'll work in a partnership with someone, and they'll have a huge success. They'll, you know, increase their productivity by, you know, hundreds of %. Yet they'll still keep a portion of their plot with their traditional practices, because they can't risk, you know, taking on a new practice or a new behavior and have it spoil their entire crop. And so it's slow. And so what we're doing actually with the Behavioral Economic Research Institute is building on a research angle to say, you know, how can we better understand the behaviors and decision-making of smallholder farmers? And how can we then understand what it takes for them to uptake new technologies and what drives that uptake? And then how can we support the companies that we invest in to, you know, take on that learning and then better increase the uptake of their behaviors and practices. And so I think it really builds on the point to say that it's not enough just to have, you know, the new innovation and, you know, new practices, et cetera, that are going to, you know, create more climate resilience. It's actually about how do you get smallholder farmers to adopt those practices. And not only that's going to make our company successful and therefore the fund successful, but we want it to influence, you know, way more than just the companies, the 15 companies that we're going to invest in. It really should be, you know, all the companies that are creating these innovations and bringing them to smallholder farmers. How can they learn from, you know, what it takes to get farmers to kind of adopt these behaviors at scale?
Thank you, Kate. So we're out of time. One more public announcement on behalf of Joe Puri. Please, there's a survey in your packets from the Independent Evaluation Unit. Please, if you could do us a favor and complete it and turn it back in, she indicates that she would appreciate it. So thank you. So just to wrap up, it certainly sounds there's a unique and important opportunity that exists for public and private side entities to work together to increase climate change related flow of funds in developing country. Certainly, you know, there's a patient capital needs to be considered here as in the developing world. So these are long-term commitments. GCF, of course, could help de-risk a lot of the transactions to help the private side actors feel more comfortable in engaging in these transactions. And certainly GCF could help with preparatory or readiness funds, help build capacity within the country to help them take advantage of more sophisticated structuring and so forth, as Minister Cosgrove alluded to. So let's leave it at that. I hope you found this session useful, and I want to thank you and our panelists again for your support. Thank you all.